I'm Maurice Jackson. I'm delighted to have you join me here today. A couple housekeeping notes as we begin our discussion today. Today's information is not investment advice. Also, take this moment right now to look at the bottom of your screen, click the subscribe button if you haven't, give us a thumbs up, and leave a comment below. Your feedback is always welcome, and to see how we can improve the content here for you. And I wanted to discuss today some very important talking points that I believe are being kept from you or maybe being overhyped for you. And so what I wanted to discuss today are three critical points. Number one, why is gold going up? Number two, who is buying gold? And number three, should you be buying gold right now? I want to give full credit where credit is due. Much of what I'm going to share today comes from the president of Miles Franklin Precious Metals Investments, Mr. Andy Schectman. He's been on the forefront advocating, sharing much of what I'm sharing here with you today. So I want to give full credit to Mr. Schectman. Okay. So this isn't, something that Maurice Jackson digged up. This is what Mr. Schectman has been conveying, and he's been on point time and time again. And so I want to convey with you those three talking points. And I want you to put yourself from a dependent mode into an independent mode. And that's critical to understand here, because here in North Carolina, we are going through the hurricane season as it ends next month. And I'm reminded of when the news comes on and it tells you that a hurricane's coming, and everyone's very passive, if you will, for the most part, until the final 2 days, and then there's this rush. But you've been notified well in advance that this storm was coming. The difference here today, ladies and gentlemen, is that there's a financial hurricane coming to you. And it's not just going to impact the East Coast. It's going to impact everyone in the Western world. So not just the United States. All right. You're not, the impunity is going everywhere. How can you set yourself up? We're going to address that here. Also, as I'm speaking today, I'm reminded of two comments by two of the best minds in the natural resource space. Rick Rule says it best: either you're a contrarian or you're a victim. Bob Moriarty says that if you do not own physical precious metals, then you are financially ignorant. And I agree wholeheartedly with those remarks by both of those gentlemen, because they are the most respected, financially successful individuals, or some of the most respected financial individuals in the world. So let's discuss why gold is going up. And as I'm speaking, I want you to think here. We're talking about end of October, going into November. We're talking about the election season. Why are you not hearing this by any of the candidates? We're hearing different talking points, but what is germane to you, and it seems for everyone when they're looking at who they're going to vote for, we tend to vote with our wallets. That's just I hate to say, we don't look at the Constitution, we vote with our wallets. Who's going to benefit me financially? But irrespective of who's going to be in office, there's something you need to remember. The national debt is going to continue to grow, and it is going to eventually explode. That financial hurricane is coming to us. You must prepare yourself. Because if you have the mindset, as many people do, is that if something bad really happens, the government steps in, that is not the position you want to be in. You want to be independent. I know when I, as a husband and dad of 3 beautiful children, I have an obligation to make sure that when something bad happens, there's a contingency plan. This is your contingency plan for your family. So take a pen and paper, make some notes, and then come up with a plan that works for you. So let's talk about, why is gold going up? The reason gold is going up, we have to look back at, number one, I just referenced the national debt. Keep that in mind. And now let's go back a couple years, 5 years ago, basically, to April 2019, where the Bank of International Settlements, or 18, I'm sorry, where the Bank of International Settlements, which is basically all your central banks, they meet in Basel, Switzerland, and they decided to make gold a tier 1 asset. Now, what does that mean? This is what it means. if you're in the Western system, and we use what's called SWIFT, all right, in the Western system for countries to transact with one another, the U.S. currency, the Federal Reserve note, not the dollar, the Federal Reserve note, has been a tier one asset, meaning if one country owes another country, if they use our currency to pay them off, that's good as gold, if you will. Well, that changed. When countries sat around, the central banks of other countries, they sat around at the table and they said, hey, wait a minute. If I owe you, why do I need to pay you in U.S. currency? If we just think about it logically, the United States is the greatest nation, debtor nation that has ever been recorded in history. No country has ever been in this much debt. The United States, they're not net exporters, they're importers. Why are we using their currency? They're not the model. They're just in debt. They keep printing and printing more currency. And if you didn't know, the biggest industry for the United States is actually our currency. When we create it and we ship it out, 50% of all the currency created leaves our country to go into the systems of SWIFT, if you will. And those are the tier one, and it's been a tier one asset. So they said, no more. We want to use gold now. So gold went from a tier 3 asset to a tier 1 asset. Before, if a country owned gold and they owed another country, being a tier 3 asset meant that when the other country received the gold, the spot prices, let's say, is 2,000, the other country would recognize it being 1,000. So now that is no longer the case. When that decision was made, the central banks around the world started dumping their Federal Reserve notes and started being net buyers of gold in a demonstrative manner. They have been buying and buying and buying gold. So this is the reason why gold is going up. Caveat that with what is known as the BRICS nation. And the BRICS nations are Brazil, Russia, India, China, and South Africa. They are creating a new monetary unit called, what's called the unit. And it is supposed to have a backing of 40% gold. And there are a number, and I'm going to include that in the description box below, a number of countries that are joining the BRICS nation. So it's no longer just 5 countries, it's more countries involved. And so now the countries that had gold stored in the United States, because it was being hypothecated and rehypothecated, they're now wanting their gold back. They've taken their gold back and they're keeping it within their country, respective country. So the new system, if you will, that it's going to be called mBridge instead of SWIFT. The mBridge system allows these countries to retain their gold in their country, not in a depository in Brazil, Russia, India, China, or South Africa. They get to keep it there respectively. The new system also has a very demonstrative and duplicitous impact on the United States twofold. All that U.S. currency that has been around the world will come back home because the demand for it won't be there. That means prices are going to go up. Okay, that's very important to note. The other aspect of it is this. From a strategic level, the United States uses what's called DIME. It's diplomatic, information, military, and economic. They use the economic model, if you will. That will be handicapped because we no longer can impose sanctions on other said countries because they're no longer in the SWIFT program. So one of our instruments of power is going to be gone. Again, huge ramifications. And you need to prepare yourself. This isn't going to happen overnight, I don't think. I don't know when it's going to happen. But the change is coming. And shame on you if you have not taken action to buy gold. So who else is buying gold? So the countries that are joining the BRICS nations in this new monetary unit called the unit, and it's using the mBridge system, the letter M and then the word bridge, mBridge, okay? They are now going to be buyers of gold, and that is for central banks around the world. They're buying gold, they're gobbling up. So that's what's causing the prices to go up, along with the most sophisticated minds from sovereign wealth funds to hedge funds. They're buying gold. Who is not buying gold are individuals. Usually when gold is at an all-time high, which it has been a number of times this year, and it's retreated and gone back up and reached a new high, The individuals are not buying right now, which means premiums are low. That is an advantage for you, even if the spot price, the price for gold has gone up. This is an advantage for you that the premiums, because of the physical demand of people buying and what's in the warehouse, is not moving. That's good for you. I want to make sure I have covered all my talking points here in reference to that. Give me 1 second, please. And if you have any questions or comments, feel free to join in. And also, just looking back at it, the central banks right now they have their lowest position right now in Federal Reserve notes, which everyone calls dollars. They have them at a 25-year low. It's only a 57% reserve ratio right now that they have. I'm sorry, not reserve ratio, that they have in reserves. 50% of their financial backing is using the currency, our currency. That is changing. So I'd like to see where those numbers go next year. And I regret that I don't have what they were last year, so you can just see a comparison. But there's a change occurring. Now, the question I receive frequently, and that's why I'm making this video, is should you be buying gold? That depends on you, meaning, do you own any precious metals? If the answer is no, you absolutely should be buying gold at these prices. You don't want to be naked. You want to own gold. The number that I'm hearing, should the system come out with BRICS, and it's going to be a central bank digital currency, by the way, as well, with a 40% backing of gold. Should that come out, the gold price obviously will take off. But if the United States wanted to rebut them and say, hey, we have 8,300 metric tons of gold, if we revalue that right now, then with our currency, then that would make gold to be possibly above 6 figures per ounce. You heard that correct. Now, if you think that is illogical, ladies and gentlemen, just look at Bitcoin. Digits, right, on a computer screen have a value right now of 60, almost close to 70,000. When you're dealing with the most secure financial instrument in recorded history being right now at just 2,700, that is not illogical. But I'm not here to hype you up on that, because the reason I own physical precious metals is not a get rich quick. The reason I own physical precious metals is a hedge, is a financial insurance, and as a savings account. I'm not using it to get rich quick. That should it go to, let's just say 6 figures, or gold goes to 10 figures, I'm not looking to dump it. No. And if I did, the first thing I'd look at is the answer to the other part of this question is, if you currently own gold, I would not exceed 15% of my physical allocation. I would not exceed that in gold, because the ratios do not suggest that gold is the optimum purchase when you're looking at buying physical precious metals. I would look at platinum number 1, silver number 2, then gold, and palladium number 4. And by the way, palladium this past week jumped $100. It went from 1142 to 1262. Who's talking about it? We are. I've been advocating to a number of my clients that you should be buying some palladium for quite some time. And it was just David Page, credit to you again, sir. David Page, friend in Florida, shared with me that Russia is looking to add platinum, palladium, and silver into their strategic assets holdings, because keep in mind, they produce 40% of the palladium in the world, but that doesn't mean they retain it. One of the reasons they've been able to continue their war efforts is they've been selling to China. Okay, but that doesn't mean they've been storing it. Now they're looking to actually store it because, again, we're talking about BRICS, and Russia is one of the countries in BRICS. So it's going to be a metal-based, resource-based currency when you're dealing with the BRICS. When you're dealing with the United States currency, there's nothing backing it. It's just that it's what we've used. And monetary history shows that's not a good outcome in the long term. Resource-based is, I agree with it in many ways. It fits my paradigm of thinking. It's what do you have as a value, somewhat should determine, or not somewhat, it should determine the value of your currency, right? There's got to be some kind of backing. If not, you're just printing something and it says you're saying it's worth something. So should you be owning gold? If you don't own any, yes. If you own gold, your physical position shouldn't be greater than 15%. You'll have your opportunity to transition from platinum and silver in the future into gold. The way to look at it is that you're buying silver and platinum and palladium basically as a discounted price to gold right now. Simple way to think of it. But we're not looking at a get rich quick. I've also shared that if you're really excited about gold, keep in mind, you right now watching this, you're using critical analysis, you're using independent thinking. The generalists aren't here yet. When they do come, you'll usually see the top tier first come, the mid tier, if you will, the people that have financial planners. Those financial planners are going to guide their clients not to own physical precious metals, but to own a derivative of it, which will be in an ETF. The answer to that is wrong. You don't want that. Because when you sell the share of that ETF, which is a stock, right? When you sell it, what do you get in return? You're going to get back currency, US currency. That's not what you want. You're wanting the underlying metal, which is the coin or bar. That's your advantage, not a derivative of that. Now, one way to play this, and this is my view, one way to play this great is you beat the herd and you identify said companies that have royalties on gold, are mining gold, or exploring for gold. If you go to our website, we are biased, absolutely. I'm a shareholder of every one of these names I'm going to share with you. But I want to point one company out in particular right now, and that is EMX Royalty, which is a gold and a copper royalty company. They just announced this week, if you go to our website, I'll put a link here as well. Go to our website, you'll see that they just made an announcement that for quarter two, they just received another close to 1.6 million on one of their many projects. This is a robust portfolio that they have. Again, EMX Royalty. Again, if there's only one company I could own, it would be EMX Royalty. And it's for this reason: the geological and business acumen, second to none. I actually just corresponded with the CEO, David Cole. I plan to bring him onto an interview in the first week of November to get a company update. But just a snapshot here. Think about this. They made a $200,000 investment about 10 years ago in a project, the Timok project with Zijing Mining. Now that project has already yielded from a $200,000 investment, 11.5 million in revenue already. The mine life for that one project is to be over 30 years. And the estimated revenue, if copper remains at $4, is going to be 400 to 500 million. And that's in Canadian currency. Think about those numbers. Or actually, those might be US, I'm sorry, US. Irrespective, US or Canadian, from a $200,000 investment, look at that right there. That's astounding. That's just one of several projects. So join us next week or early part of November when we bring them on to our program. Another company that always has my attention is Riverside Resources. I'm in constant contact with the CEO there. That's Dr. John Mark Stouty. They're doing a number of exciting work in Canada and Mexico, but really here lately in Canada. And again, this is if you will, a smaller brother to EMX Royalty. By the way, EMX Royalty, you're looking at a market cap right now of 200 million. We just shared one project is going to bring them in over a 30-year period, 400 to 500 million. That is astute geological business acumen. Riverside Resources is positioning themselves in the same way as EMX Royalty. They're a project generator, so they're going to have a project. They're going to sell that off. They're going to retain a royalty, and it is of no cost to you, the shareholder. Those are good ways to position yourself if you like gold. And again, Riverside Resources is gold, copper as well, rare earth metals. Great way to position yourself in a very safe way, because if you watch my interview with Rick Rule, and both, I've done interviews with Rick Rule and Mr. Cole and Mr. Stouty. Look at those interviews again. I'll put them in the link for you, save you some time. But if you watch those interviews, you'll see why Rick Rule is a strong advocate for project generators and royalty generation. So those are two companies. If you satisfied your goal position, good way to caveat that is you get these companies now because they're on discount. They are on discount, just there's no other way to put it. All right, you have no competition. I think EMX royalty right now in US is right, a $1.97. If you look at Riverside Resources, I think they're around 14 cents Canadian. All right, and when I buy EMX royalty, I prefer to buy it on the New York Stock Exchange. They're the only company I think that I can think of in the natural resource space that is on the New York Stock Exchange. That's where I buy that symbol. Other than that, I'm on the Toronto Stock Exchange. Okay. Another company that excites me is Grizzly Discoveries. You're going to hear a lot from Grizzly Discoveries. I am extremely excited about them. They're in the Republic Greenwood Gold District, which is basically southern British Columbia, the northern part of Washington State. They have 160,000 acres. They own about 10 historic mines. They just had an incredible press release come out, and I'm bound by a non-disclosure, so I can't share with you all the catalysts that are coming out, but we're going to be doing interviews on them here in the near future. Worthy of your attention, because this is a company that could be in production in about 18 months. A number of catalysts. The Greenwood Republic District, again, I think is going to be on everyone's radar, but I want you to know that you heard it first right here on Proven Improbable. And again, Grizzly Discoveries, I believe they had a finance earlier this fall, and I believe they may have a finance coming up. So if you're an accredited investor, this is one I would definitely say merits your attention. Again, I'll put a link in there for Grizzly Discoveries. Another company that is actually doing a finance right now, this is all public information, and I'm very big on them, is Gold 79 Mines. We've interviewed them a couple of times, interviewed them earlier this year. They just completed a merger, and they're in the Walker Lane district of Nevada and a little bit in Arizona. Got a joint venture there with Ken Ross. Just a number of catalysts going on there as well. They're in the right neighborhood. And again, this is an exploration company, and they're currently going for 30 cents right now. 30 cents, yeah. So these are some companies that you should put on your radar. We're active buyers. We've been active buyers on them. Another one I absolutely love, Dolly Varden Silver. Sean Kun, future, he's going to be the name, if you will, for future generation of wealth builders, the next generation of wealth builders. We interviewed them, 18 months ago. They were 45 cents. Just recently, this past week, $1.42. Gold Shore Resources, another one. We interviewed them earlier this year. They were 8 cents. Just hit 38 cents. So but the upside is still there. There's more upside for these companies, in my opinion, and so that's why we're active buyers. We like them. We're going to continue to be active buyers. But I'm trying to share with you how you can benefit if you're looking to position yourself where you can get some fiat currency should these stocks go, and then get more physical precious metals. But this is again germane really to if you're wanting to get some exposure in gold, but not owning the physical metal. These are some great options, including Lion One Metals in Fiji with the Tuvatu alkaline gold project. Sorry, little voice tremor there. They have an alkaline gold project. They're right now at 32 cents. You talk about high grade gold, proven management. It's all there. So Lion One Metals is definitely on my radar. This is high grade gold. It doesn't get higher than this. All right. So if you're looking for exposure on some very qualitative names, they're going to be in the description box below. Let me see if I missed someone. Oh, Emperor Metals, the Duquesne West project. They're conducting a finance right now. Again, this is public information, but the Duquesne West project with Emperor Metals, I'm big on that one. They are in a prolific mining district, so the upside there is looking very promising. And this could be an open pit project, and it could be in production soon. But I would expect them again to not be around. If they continue to have success with their drill results, which I'm expecting them to come out soon, they probably will be taken out, and that's fine. That's a great arbitrage opportunity there for you. So Emperor Metals is one. Did I miss anyone here? Oh, here's what I did forget. So we talk about gold and silver, platinum and palladium. Let's not forget about copper, and let's not forget about uranium. When you look at AI, the demand, and I've been putting a number of these releases out on my website, the demand right now with AI, it is so intensive with energy. that these companies, Google, you name it, Tesla, all these companies right now, they're looking to procure uranium. Companies that I like for uranium. F3 Uranium, we interviewed them earlier this year. Mr. Raymond Ashley. You look at Strathmore Plus Uranium in Wyoming. I mean, these are qualitative names, and they all fall under the umbrella of one of the most prolific names, a icon, if you will, in uranium, and that is Dev Rendhauer. So you want to position yourself with the right names in the right location. F3 is in the Athabasca. That is the most prolific area, high-grade uranium in the world. Then you come down south a little bit to Wyoming, and you have Strathmore Plus uranium. So these are some ways to pepper your portfolio of physical precious metals, and then beating the herd, because uranium has fallen off the radar for everyone because it's been stuck around $80 right now. This is your chance to come in and buy some qualitative names right now. I want to make sure I didn't skip anything here. And also, if you have any questions or comments, feel free to come in. Yeah, I think I covered everything I wanted to cover here with you today. Keep in mind, this is so important. When you own physical precious metals, it's a private investment. You don't need to tell anyone that you have it. It's analog. When you buy physical precious metals from us, it's being shipped directly to you. If you have a retirement account and you're no longer with that employer and you want to own physical precious metals, you can get a physical precious metal IRA. Or if you're just looking to have your metals stored outside of your residence, then we offer BRINKS depository accounts for you. And we just opened up a new location in Dallas, by the way. So questions or comments regarding anything that we've covered here today, leave them also first, if you would, thumbs up, thumbs up on the video. If we're being a good steward to you, leave a comment below, and then you're welcome to also leave a question that you have regarding this video in the comment section below. And you may reach me at 855-505-1900. Again, that's 855-505-1900, or you may email Maurice@milesfranklin.com. That's Maurice@milesfranklin.com. Till next time, this is Maurice Jackson, wishing you and your family the absolute best.